We got the big number right here, right? 9.58 million. You can see there the estimate was for 9.6 million. Remember, this is the month of June. When we talk about that Friday jobs report, we're going to be talking about the month of July. So this is the month of June, 9.6 million job openings. Ticked down a little bit from May, but largely in line with what we've seen trend. And when you take a look at the trend, you can see the purple line here is job openings, significantly higher than it was before. This is also a great look, Jared. We often talk, you hear Federal Reserve Chair Jay Powell talk about a better balance, right? Yes. We want a better balance between hires and job openings. Hires is blue, so hires not necessarily ticking up, staying right in line here. Job openings starting to come back down there, but for that better balance that Jerome Powell talks about as well, the Fed probably wants to see job openings continue to come down significantly more than we've seen thus far. And then finally, to close out here, we can't talk about the labor market this week in the first week of August without talking about the July jobs report that is expected on Friday. Here's what we're looking for. 200,000 non-farm payrolls. That would be a slight decline from what we saw in June. Unemployment rate roughly flat. Average hourly earnings to come down a little bit to 4.2%, and the labor force participation rate at 62.6%. Again, a key thing to look for here is, does this number come in below what economists are projecting? So would it show more of a slowdown in the labor market? That would be a key indicator. Does average hourly earnings come in lower than expected? So are people earning a little bit less? That is key to this fight against inflation and is a big focus right now in the overall economy, because this strong labor market, it is what is driving that consumer spending that we're seeing. And that's what becomes the long-term concern when we talk about the fight for inflation.